Okay, so what we're doing today is we're learning how to swing trade. This should take about 30 to 45 minutes max. And understand, because a lot of you all are new, I don't highly recommend swing trading for a new trader, someone who's been trading less than 90 days, because you kind of got to know how to understand how the market flows. But I'm going to teach you today how to identify the proper trade, give you as much information as I can. You're going to learn how to back test. You're going to learn about gap fills, GAP. You're going to learn about delta and theta decay. Those are the main things. You also we will look at the contracts to show you the difference in the price. When you swing trade, the contracts are much more expensive. So that $100 play is out the door. So if anyone cannot, if $100 is a struggle for you, you might want to exit this right now. When you swing trade, you need more capital because you need to be a little bit closer to the money. So minimum is $500. Sweet spot is $1,000. I mean, a good spot is $1,000. The sweet spot is probably around $3,000 to $5,000. And I'm just being very, very honest. And I'm going to show you all the contracts today. So we will, by the end of this call, do a swing trade, a paper trade, just so you'll see what it looks like. Does that sound good to you? So you can see, hey, let's swing a trade out from Friday to Friday. And then you have a flow of what it looks like, and then you can get your own swing trade on Monday. So you can swing it from Monday to Friday. Now, I prefer a $30, a 30-day swing out. But for you all just starting out, I know you probably can't, that's a lot of money to do it for 30 days. So you may want to just find your contract and swing it out 5 days. I have been in positions where I got in a swing trade for 5 days, and that sucker went down the whole 5 days. And I just needed it to go up $1.50. It literally got almost there and did a nosedive. It went down like $8. So needless to say, that was not good, and it can happen. So this does come with a disclaimer, but swing trading also can be very beneficial if you do not have time to go enter trades on a daily basis or a couple of times a week. If you have an unorthodox work schedule, it will be beneficial for you. Those are the main things. And if you just do not want to have the hustle and bustle of trying to figure out what the market's going to do on a daily basis, then swing trading is definitely for you. I love it, especially when you have more than enough to and you have extra money, then I would definitely swing it out. Because one thing I'm going to teach you is that how the market always retraces itself. So when you learn how to buy on the pullback or enter that position on a pullback, then you sit back and watch your profits go up. So let's start with number one. I'm going to now share my screen. We're going to start with back testing. Now I can put this on. It will be available on YouTube if you like. So we're going to go to back testing. You can see my screen, I'm sure right now. I'm going to move this out of the way. Now, write this down. With back testing and anything when you're in the market, you must look left before you go right. With every play, if you notice, when we're in the market, we always go left. We look what happened to the left to determine what we're going to do to the right. Just a rule of thumb. So whenever you're staring at that market and you look straight and go right, already know you're looking wrong. Even right now, I'm looking at this 1 minute chart and I'm looking at a green candle. It seems to be engulfing, but I don't know yet because it hasn't closed out fully. Yeah, it engulfed. I have to look at this green candle and still look left. See the green candle, you look left at the red one. That's the same thing with back testing. So here are the time frames that you want to look at. Let's go up and adjust our time frame. We're going to go back and look to the 1 year, 1 day. So we're going to pretend as if we're going to swing out SPY. 1 year, 1 day. If you don't have it, 1 year, 1Y, 1D, we can customize it. Does anyone need it customized? Or do you have 1Y, 1D? Angela, is it in the chat?
Nothing yet.
Okay, so I'm gonna go forward and just assume everybody is good. So if you look at this so to the far left of the screen, remember you gotta look left before you go right. That is what the market did last year this time. So last July, the market was at 535 as a low. And the high was 530, 550. So we clearly see how far we've come. Now, when we look left, we're looking left and going right, we're looking for pullbacks. So I want you to see from the far left of your screen, where you see my cursor, all the way up until until February, the market was making higher highs. You see that? Trent drew the line just like this yesterday. And right here, actually it was right here. Higher highs. I missed that spot right there, but you all get it. I missed it just a little bit. I gotta try to fix it. Higher highs. That, if you were going to do a swing, you definitely would have done a what? Call. Because overall, this market is going up. And then in February, it actually made a double top, came down, spiked again, and then finally right here in February, it took a nosedive all the way down. So this would have been bad if you were in a call thinking it was going to continue to go all the way up. The market never goes straight up, even if it seems like it. It never goes straight up. It takes the stairs up and the elevator down. Chris Sane always tells us that. All right, so 1 year, 1 day. Now let's maximize our screen so we can see. I want you to zoom in, zoom in, zoom in, and go all the way to the right of your screen to the current day, where it says 635, 636, 15 high. Each candle represents 1 day over the past year. We want to start looking back left for gaps. This is called, we're doing what we call, I'm teaching you about gap fills. The market has gaps sometimes, and wherever you see a gap, it is coming back to retest it. That's actually a small gap right there. On the top of this second candle from the right, the price is 634.10, and we go to the bottom of the next candle. Okay, so that's not a big gap, but it is a gap. 634.10. I'm gonna leave that one alone. That's like 10 cents. Let's drop down to the previous day, 2 days ago. Here's another gap. Let me see what that is. 629.78 to 630.10. That's not a big enough gap. But when I say gap, the market will come back and fill these. The market, so it can fill it with a wick. You know, I showed you that long wick that you see. It can do that in one instant and fill the gap. So you kind of be careful of that too. But I'm going to show you another place where it was a gap. That's a pretty decent gap right here. This was a $2 gap right here on 7/3/72, July 2nd, up until July 3rd. So in overnight, it gave us a $2 gap. Now you want to wait to see if it fills it going forward, and it did. This candle filled the gap. You see, because of this red candle and wick, that there's no longer a gap right there. This is what you call gap fills. The market always retraces itself. So when you're getting ready to swing trade, the first thing you want to do is pull out your chart, go back 1 day, 1 year, and you want to look for gaps. There's a gap right here. So at some point, it's coming back down to 600. It's going to hit 604, 603, then come down to 600 at some point. That's how I knew to get in the swing. I knew SPY at the time was 579. It had gaps. I knew it was going back up to 610, 613. I didn't know it was going to go to 636. But anyway, so this is a 1 year gap. All right. Now let's go to our next time frame, which is 30 days, 1 hour. 30 days, 1 hour. This will become so much faster when you start. Now, this represents the last 30 days, what the market has done. And we kind of, we've been on an uptrend. Pretty much been on an uptrend. You clearly can see that. Zoom in if you want to look for gaps over the last 30 days. The black area is the live market. So this is today. This was Wednesday. This was Tuesday. This was Monday. This was Friday. You get it? Last Thursday. So we're looking for gaps. We don't see it. They got it tight right here. Ooh. Okay, so there are no gaps. No gaps that I can see. So this is what I do. Just go back and look for gaps, gap ups. If you see a gap up, that means it's going to the upside, and a gap down to the downside. So just as a quick preview, and this is how you do, oh, you'll see this gap right here. There's a gap from last week. And that gap is between you measure the two candles. So 621.60, 622. So that was in a pre-market. Guess what happened the next day with this gap? It came up and filled it. It filled the gap. So now that's no longer a play for us. Okay. Scrolling. So no gap. I'm looking for gap ups at this point because the market is in an uptrend. Okay, so no gap ups. Great. Now we move down to the third time frame. 5-day, 15-minute. So now you want to look at what happened over the last 5 days, because I feel like most of you guys are going to be swinging out for 5 days. And you can choose your 5 days. You can choose it Friday to Friday. That means you're going to go over the weekend, or you're going to choose Monday to Friday. It is your choice whether you want to keep a contract in over the weekend. Sometimes it is very beneficial, and sometimes it's extremely detrimental. It just depends on the market. Okay, so we're on our 5-day, 15, and guess what we're looking for again? Gaps. So we're looking for gaps the 1 year, 30-day, and 5-day. So where did this thing leave us the gap? I want you to do exactly this. No gaps. No gaps. You see how tight the candles are? That's how you want it. Always remember that the candles are very tight together. So if you see a gap, it's going to close it. It's going to fill it. And sometimes it'll fill it. This major candle right here probably filled a gap somewhere and shot back up. Pushed it all the way down to fill that gap. It won't always be a lot of candles. Okay. Oh, and look, there it filled it. Well, I want you to see how I'm going to play this letter right here. 627.93 to 628. So 627, where I told you where that long candle was, right here, look. It came all the way down past 627, came all the way down to 626.83. It filled that previous gap from 3 days prior, 1, 2, 3 days. Or 4 days. Which day was it? 3 or 4? Went back 3 or 4 days, 3 days and filled that gap. So that was a gap fill. So that's what you look for first. So when you sit down to the paper trade, go back and look 1 year, 1 day, 30-day, 1 hour, 5-day, 15-minute, and you're looking for gaps. You're also looking for the trend. What is the overall trend? Right now, the consensus is the overall trend, it's up. We saw it. We saw it all in 2 eyes right here. This is an uptrend. Would you not say that? You got pullbacks, but it's an uptrend. A pullback, I think I've explained that to you before. If not, let me know in the chat. I'll go back and show it to you. But pullback is just when the market, as it on its way up, it drops down a little bit and goes back up. Right here on this 15-minute chart, uptrend, and then it pulled back. Pulled all the way back, but then it recovered and continued to go up and then made a new high. This is a pullback. Okay. So if you're in a swing trade, don't get afraid if the market is pulling back. It's the difference between pulling back and crashing. All right, so you have that now. So now we understand if we're going to do a swing trade today, what are we playing? A call or put? Put it in the chat. All right. So now we're going to go back down to our regular 1 day, 1 minute. And let's get our phones and pull up Robinhood, because now we're going to go look at contracts. So this is what you do. You've done your due diligence over the weekend, in the morning, right before you get ready to get in your swing trade. And a swing trade should never be a knee-jerk reaction. You plan for it. Okay, when you get to Robinhood, just go ahead and pull up SPY. Okay. Now we're going to go into our contracts. Sorry, guys, I haven't called it. All righty. I'm getting there too. So click trade, trade options. Now, this is where it gets good. We're gonna swing out, let's swing it out for 5 days. Let's do our contract expiration date for let's do it for next Friday. What's the date? I'll pull it up real fast. Oh, May. Okay, let's do August 1st. Let's look for August 1st expiration date. All right, we're doing a call. August 1st, I'm gonna write that down. August 1st. We're doing a call. And we're looking for a contract at least minimum of $500, and I'll explain that. So let's find us a contract that is at least 500. Perfect. I see one right here. It is a $636 call. $505. Let's do a paper trade. Now, before you go any further, under 636, now you're going to pay attention to the left side of the screen. Remember when we're just normally getting in our contracts, I said, don't worry about the left, let's stick to the right. Now we want to look to the left, and you want to look at what your break-even price is. So the break-even is $641.05. The current price, right up under that, is $635.80. So we're pretty much $4 away from the share price. This is still considered out of the money. Now, if you had $1,000, let's keep scrolling up to get even closer to that. Now that looks a little better. Yes, sir, it looks a lot. Well, you're $3 away. The break even is $638, and the current price is $635. So what you need this to do is move $3 over the next 5 days for you to start making $100 per contract, per dollar that it moves. Case in point, SPY is 635 now. What if SPY goes to 640 by next week? Just what if it goes to 640? That means anything over this $2, you would start making $100 per contract. You got one contract, you've already been making money, because as long as it's the play going in your direction, you may not be making 100, you may be making $50 per dollar or $70 per dollar. But every time it moves, 70, 70, 70, 70, and then as soon as it hits your break even, that's when you start making $100 above. That's a strike price. This is your strike price. 628 call will be your strike price. So let's take a look. Let's go into a paper trade. Right here at the 628 call, $1,057 contract. I want you to tap the middle of the screen as if we're going to get in a paper trade. Now, I knew it was doing this, it's going down. That's why it's like this. I want you to go down and look at the Greeks. Right up above the watch list, we're going to look at the Greeks. I want you to pay attention and write down two things: delta and theta. Delta and theta. This is your time decay. Delta is 73, theta is 33. Whenever you get into a contract, you want your delta to be above 50. You need it to be above 50. You subtract the two from one another, and that tells you how much money you'll make off this contract as it moves in your direction. So you're gonna make $50. You're leveraging $1,000 to make $50 per dollar that it moves. So if this contract moves $2, you made $100. If it moves $4, you made $200 off of this contract, leveraging $1,000. This is called the Greeks, delta and theta decay. Now, every time this play goes against you, your delta goes down and the theta goes up. Theta takes your money, delta gives it to you. They're all working at the same time. It's like good and evil. God's working and the devil working. This is it. So as this delta starts to rise, as you're making more money, it will change. So you may enter it at a 73, and as it's going in your favor, it will start going up to 75, 80, 82, and the theta will start decreasing. Okay, so remember, always you want your delta above 50. Now, Let's go back out. Do y'all want to go ahead and get in this? We can go ahead and get in this one. We can get into swing so you can see what the $1,000 does and the 500. Are they saying yes, Angelique?
Yes.
Let's go ahead and hit add to watch list right here. All right, it's added to the watch list. Click open. I'm gonna scroll up and see what we are already. Oh, we've made a whole $3. So we leveraged $1,053. Oh, 56. Oh, it's going up. Okay, we leveraged $1,053. So far, we've already made $3. And there you go. So we're gonna leave this play alone. It's going in our direction. You do not have to stay in your swing to the expiration date. The moment it hits your 25% profit level, you're out. You're not taking 5% a day. You're doing 25% because these contracts are for a week. So remember how we play? We do 5% a day. 5 times 5 is 25. So you want 25%. That equates to, if you got $1,000 contract, you pretty much want $250. So if you leverage $1,000, when this contract gets up to $250, you need to exit the contract. That's all you need from it. That's all you need from it. It's $250 out from the 1,000. So let's go to our $500. We're gonna stay in this one. We're gonna stay in it until Monday. So now let's go find us a $500 contract. Scroll up. Do the same thing. I see the $636 call. It's a $503 contract. Let's get that one. Enter a paper trade. Now the delta for this one is 51. It barely made it, but the theta is still 33. So now you see how you make a little less than the 70-something dollars. So now you deduct 51 from 33, and that's what you would currently make per dollar that it moves in your direction. You hold this for an entire week. So let's give an example. We're gonna get in this trade first. Add to watch list. Open it up. All right, so we're just down $1, no problem. No problem at all. So this contract right now, the last week, we needed to go up, what, $3? So let's see what it did in the last week. SPY went from 626. Look, it went up $10 in 1 week. This SPY moved $10 in 1 week. If you were in this contract, you already making money because you make your look 20-something dollars per contract or $30 per contract. But each day you hold it, it kept going up. It kept going up. It pulled back right here, it went up here, and it pulled all the way down. That would have scared some of y'all, but remember, you're in it for the long haul, and it recovered and continued to go up, pull back again. Now, each time it pulls back, it affects the theta. It affects the theta. That's why we push the date this far out for a week. I like it 30 days, preferably 90 days. You have time for your play to breathe and change directions. But yeah, so this would have been a great swing trade. You only needed to go up $2 or $3. It went up 10. So now you just made $700 on the extra, plus what you had already made for those couple of days when you were making, I think, $20 or $30. So this was an easy $700 or $800 play, and you only leverage $1,000. So in that case, that is extremely lucrative. Got it? Okay, so we're in 2 plays. We're going to stay in these plays until Monday just to see, give you a feel. And then if you like it, you'll be ready to go into your real position. Now, these contracts are more expensive, as you can see, the closer you get to the money. And let me give you an example of the further the expiration date goes out, how much more expensive they get. Just X out of there, go back to your options chain. Let's spin this one out. Let's see, with August 1st. Let's go to September 1st. Keep going across, scroll across the top of your screen. We have September 5th. Let's do that. September 5th, call. Let's decide we're going to do a $1,000 contract. We see one, scroll up just a little, do you see $10.95? The break even is $6.49. The current price of the stock is $6.35. So we gotta go with $14, right? Is that 14 or 16? We gotta get 35, what is it? 39, yeah, $14. Gotta go up $14 over the next 30 days. But let's click and see what that delta is. Act as if you're gonna enter a trade, click the middle of the screen. Oh, no, I wouldn't touch that with a 10-foot pole. That delta is 51 and the theta is 16. Nope, I wouldn't do it, even though the delta is over 51 and you're making decent money. I don't know, that could turn in your favor. No, I would take it. Let me go back. I'll take that. I'll take that. But you gotta look, when was the last time that SPY went up $14 in 30 days? You know, you wanna see? Let's go. Let's look at 30 days ago. Did it go up $13? See, this is the kind of comparisons you have to do. So right now the low was 610, and now it's 636. So it went up $26, which is still good. I ain't mad about it. You still make money. You wouldn't be making $100 per dollar, but nobody's complaining about a run up like that, a $20 run up. So you might be $20 per dollar that it moves in your direction, or $40, and it moved up 20 times, I don't know, 10. Yeah, but that'd be good. That'd be good for y'all, because the goal is to get 5% a day, which is 25% a week. So you're 25% a week at $500. What is it? Where's my part? Anybody have that box? Where's my 500? I could just do it faster. And towards the end of the day, I start. Yeah, that's $125 a week. $125 a week on your $500 contract, and $250 a week on your $1,000 contract. That still equals to 100% per month, and you'll still be on schedule with everybody on our 100% gains each month. Okay? Now, the way you enter this play, let's go back. We're gonna go back to our 1 day, 1 minute, just because that's our comfort zone right now. You must have an enter and exit strategy, meaning you got to know why you're entering this. You need to say, you know what? I saw it pull back. I know that it had a gap. I understand it's been in an uptrend, and I only needed to go up $3, and I'm going to enter at this price, and I'm going to exit at this price. That's what you have to do when you're swing trading. You must have an entry and an exit. And then the next thing, you must look for A+ setups as well. Let's go to a 30-minute. Go back to our 30-minute, 1 hour. And we're gonna look for, same thing. Did we see it cross? Does it cross over the EMA? Yeah, it crossed over here and went up. It crossed over here and went up. Do we have any hammers? You can do that. You can apply the same thing. Any engulfing? Same thing. Do we see any engulfing? Yeah, we saw one right here. So it went up for 3 days it went up. Yeah. So it works the same way. You can say, oh, I saw it cross over the VWAP and EMA, and it engulfed. And it engulfed for 2 days. It engulfed, it went up for 3 days, like that. So use the same thing. And stick with the trend. Don't go against the trend. If it's in an overall uptrend, stick with that. But within that trend, you want to also look for pullbacks. So if I were getting in this play right here, it has the potential to pull back right here. It has a potential to go down to 634, which is easy to do. And then it has a potential to go here, 633, everywhere it pulled back. And then it has a potential to go to 631, 629. So this play can go down to 629, but it's new highs. We don't know the highs yet. It's never gone this high before. So the new high, 636.15. Yeah, right now it's 635.67. So we know it can go up to 636.15. Got it? So you look for gap fills, you look for your A+ setups, must have an entry and exit target. I prefer a 1 month swing, but you're going to do 1 week until you get your feet wet, until you see how this process works. And That's it overall. Now I'm open for questions.
Okay, we have a couple of questions in the chat and then I'll open it up for people who want to come off of mute. So the first question I did ask, I said, is there a suggested maximum theta like the 50 minimum for the delta?
Okay, so for example, no, no, the theta, we choose the delta first. Theta doesn't matter as much, it only matters if it's more than the delta. You never want a contract where the theta is more than the delta. Go on past that one, that's no good. But that you want your theta, your delta to be at least 50, 70 is good, and then don't get, there are some that they're a dollar. They say 1 period, 1 and a decimal point. If you ever see that one that says 1, that means as soon you in the money. Soon as it go up 5 cents or 20 cents, you're in the money. And those are expensive.
Because I know you had said, oh, it was a 16 theta, and you was like, you may not would do it, but then you said you would.
Yeah, only because I subtract 51 from the 16 to see if that was worth it to me. So I'm like, I'm putting $1,000 on the line to make 25 or 30, $26 per contract. That's why I said that.
Okay. And then Montez says, what if you hold your contracts until the expiration date and it never reaches the strike price? You only lose your premium?
Yep.
Okay, thank you. Zoom user says, what number are we looking to see how much a stock has to move to make money?
Well, for you, you're not looking for the number, you're looking for the percentage. So remember, you only need 25%. You need the stock to move 25%. That's your goal. That is your goal to stay on track with us for us that are leveraging $100 a day to get to the 400,000. You only need yours to look in that when you in your swing trade. Let's look at our swing trade now. Let's see where it is. We know it hasn't moved a lot, but I want to show you. Go back out to your main page. All the way out, where it says investing. Scroll up, let's find our position. It's under watch list. Okay, I'm gonna look at the $1,000 one. Okay, we're down -6%. No problem. And also you can let it go, you're negative, it can go negative further. You can do a -10% with this one. So it can go down -10%. And you want to take your profit at positive 25%. So that's what I want you to focus on when you get in your position. Not so much how many dollars they need to go up, because you need the dollars to make sense for you. And that you'll see it from, so while you're at work, you can just glance down a few times a week. You just glance down at it. And you also can set alerts. I can show you how to set the alerts as well. So for you, looking at this right here, SPY 630, what is it now? 630, 635, 636, where is SPY? Oh, 635. The break even is 638. You can set an alert to let you know when it gets to 638. But I don't care about that because you may only need it to go $2 to get your 25%. Do you guys understand? But if you care about that, don't get caught slipping, waiting on it to hit a certain number and it already gave you your 25%. See what I mean? So you can set your alert. If you want to, I can show you how to do that too.
So what about, but this is before, I think I might be wrong, but I think he was asking before, like when we're looking at it to get the contract.
Okay.
Yeah.
Okay, sorry. Okay, let me go back. So
Yeah.
he asked what to do now. I'm sorry, can you explain
So
it?
what number are we looking at to see how much the stock has to move to make money?
I still don't think that makes sense. Like,
You know how you were looking and you were talking about, oh, break even and the amount of the contract and
yes, I was just really explaining to them what it is, what you're looking for. Like,
Mhm.
you don't have to wait to that. See, I probably should have introduced that because I knew it would bring a little confusion. Because if we play methodically, we are chart chasers. Yes, it'd be great. I'm just showing you when it breaks even. Whenever it breaks even, you start making $100 per dollar. You don't require that. You just require 25%. So don't get stuck on when you're break even and miss your profit. So I don't know if I'm answering it right, but I just want to clear up the mind thinking. We're not worried. That is showing you what the break even is. If you get in a position, the more expensive the contracts are, you're closer to the share price. And if you're closer to the share price, you're usually closer to that break even, $2, $3, $1 away from it. When it breaks even, the only difference, you just make it $100 per contract. If you're in the right play, it doesn't matter. If you're making $50 per contract, $20, you're in the right play. And if you're in it and you need your $125, that's gonna go pretty fast over the next couple of days. Ashanti got in a swing and the next day she was up 200 and well, what she doubled, she was up 51%. So she didn't have to stay in it. She only needed 25 and overnight when she opened it up, it was up 51%. So it can go just like that. It still didn't get to the share. She didn't break even. She was still $4 away from the break-even price, but she made her money. So that's why I don't want you to get waiting for how that don't get too caught up that break even. I'll just
So you
explain it to you.
have to get
how
to
you-
that. It's just, okay. All right. But if the Zoom user is still unclear, but he can maybe clarify what he was asking. So I'll ask
Okay,
the other couple questions and then everyone can be free to ask.
okay.
Really. Crystal says, should we be looking to enter the trade in the morning or does it matter?
It doesn't matter. You've done your due diligence.
Mm.
You've done your due diligence. You know where it's gonna pull back to. You understand where it's going to. You can enter the trade, especially at swing, whenever you want to enter it. But just positioning is everything. So if you see that it's pulling back, but you know it's going to continue to go up, then you would. I kind of like to look at them later in the day. I do, because the market has already kind of done what it's gonna do. It is giving you a decent outlook on where it's going. So I typically would like to do my swings after 2 o'clock. Like
Okay.
now. Between
Okay.
2 and 3, preferably 3 o'clock.
Okay. And then Cynthia is saying only buy one contract, right? So can't scale out and take profit along the way, only buy and then
You
also
can
buy.
tell Cynthia, you can buy multiple contracts. You're just gonna be further out of money. I said, this is out of my wheelhouse for you all, so I don't control that. You're gonna be totally responsible for this. I don't touch it. And I've told you all don't touch it. So it's your money. If you want to get in here and buy multiple contracts, just note that you're gonna be further and further away from the money. Okay, so if you have I don't know what your budget is. You might want to spend $5,000 on a swing. I don't know. If you're trying to spend $500 on a swing, then that means you need to get 2 contracts that are $250. And then, well, let's go look at let's find us a contract for $250 and let's see.
All right.
While she's in, any other questions? I want to go and find a $200 contract.
That was it. And she was saying only trade SPY, but this is how to swing trade, period. You just
Yes, it's not a swing trade, period. You can swing trade Meta, you can swing trade any stock. Again, this is not my method.
Mhm.
You're kind of on your own. I'm just teaching you how to swing trade. You got support with us, but I can't take accountability for all the other stocks out there. But yeah, you can swing trade anything, AMD, Palantir, go, I'm teaching you the strategy behind it. You can use it for any stock. You know how to do a contract, you know how to look back in the market, you understand pullbacks, you understand theta decay and theta and delta, you understand your gap fills. I think you understand the contracts, how they work, and you know how much, you know what your profit level is. Your profit is 25, you get out at -10. So pretty much if you leverage $500, you're willing to lose $50 on that play. If it goes -$50 or more, don't even let it get to the more. If you do, you're going over 10% loss. Always risk management. Okay.